unmute. Hi,
Hi,
Naveen.
Vikram.
Hi, how are you? Sorry, I just had a few technological problems.
How you been?
I've been well. How are you?
I'm very well, thank you. Pollution situation bad in Delhi?
It's just terrible. I mean, it's so...
Oh, okay, but...
I beg your pardon, Kalo?
Sorry, Vikram, I was just saying that the network here seems to be a little... The network is fine, but the speed is fine, but I don't know why it keeps dropping off.
Right, okay. Well,
Was there a problem with your end, Naveen?
No.
I can hear you clearly.
Earlier it was, I've switched my network, so now it should be fine.
Okay, all right. Fine.
Yeah, I can hear Naveen clearly. I can hear both of you very clearly.
Okay, sure.
So Kalola, are you going to go through the presentation or what are we going to do?
Yeah, we can go through the presentation.
Okay.
You want to see it now?
No, I've already been through it. My only, when I looked at it again, I don't know if it's just the three of us, right?
No.
Yeah.
Right now we got to be careful because there are few, about 20 participants who joined in and they can see and hear everything that we're talking.
All right. Okay.
Okay.
Not that I was going to say anything. Yeah. No, my only point I'll still make it, Kalo, was when the first slide actually looks, I mean, given everything that's happening around the world, looks like doom and gloom, but certainly India is not. We're blessed that India isn't facing that doom and gloom.
Mm-hmm.
So, when I looked at it again, I thought maybe we should be more positive, just given. Yeah. So.
Well, we're being balanced, I would say. Cautiously optimistic.
Hello, sir.
Hi, Nareshji, how are you?
Hello.
How are you? I think you're
We
mute.
can't hear you. You're on mute, Nareshji.
Sorry, my son's name is there right now.
Yeah.
Yeah. How have you been, Mr. Oberoi?
I have been well, sir. Yeah.
Good, thank you.
All good. No reason to complain. So.
Hi, Mr. Kundu.
Hello, how are you?
Good.
So,
I'm probably in your city, so.
You're in our city, but Mr. Patricia, he's not in the city right now.
Just a quick question.
Yeah.
What time is this going to go until 3? Because I've got a hard stop. I've just got another meeting. So.
At what time?
3 o'clock. Sorry, 4 o'clock.
We can wind up. I'll make sure we manage the questions in a manner that we wind up by 4 o'clock. And
Right.
Kalol, I've shared the presentation with most of the people, the institutional side at least. So hopefully people will be more specific and prepared.
Right.
You have the presentation too, right, Naveen? Because it
Yes.
seems, I don't know what's wrong with the network. I'm in a high-speed network, but it keeps...
No, I have it. What I'll do is I'll keep it open in the background. So in case you have an issue, I'll take over and then you can just guide me.
Yeah. And I'm trying to share the screen. I think my screen sharing is disabled.
One sec. In fact, in case the network's an issue, I can start sharing the presentation from the beginning itself.
I don't know. The network shouldn't be an issue normally, but I don't know why it is.
Are you not able to load the presentation, or you're not able to display?
No, currently I'm disabled, so I can't.
No, please see now. Change the
Just
setting.
try. It may work, Kalo. Because you're very clear. There's no problem. Your image quality is good, and we can hear you very clearly.
Yeah.
It's you're starting screen sharing. Yeah.
Perfect.
It's perfect.
Perfect. Mr. Kundu, next time you come to Kolkata, Mr. Oberoi, please let me know. Would love to come and meet you, and it'll be very nice.
Sure.
Today
I am attending from Singapore, actually.
Oh, you're in Singapore, are you?
Yeah, yes.
Right.
And also now the screen sharing seems to be working properly.
Right. Fine. So we can do with this. If there's any problem, then maybe you can switch over or something.
Sure, I'll do that.
One minute more to go, Naveen?
Yeah.
Just be back in literally a minute. Just give me less than a minute.
Vikram, please let us know whenever we can start.
Yeah, I'm ready whenever you are. Absolutely. We're ready to go.
Please. Good day, ladies and gentlemen. On behalf of EIH Limited and SKP Securities, it's my pleasure to welcome you to EIH Limited's Q2 FY24 earnings webinar. We have with us Mr. Vikram Oberoi, Managing Director and Chief Executive Officer, and Mr. Concall Kundu, Chief Financial Officer. This meeting is being recorded for compliance reasons, and during the course of discussion, there may be certain forward-looking statements which must be viewed in conjunction with the risks that the company faces. We'll have the opening remarks and a presentation by management, followed by a Q&A session. Thank you, and over to you, Vikram.
Thank you so much, Naveen. Good afternoon, ladies and gentlemen. Thank you for joining us on this call. You may have already seen our results for Q2 of this financial year, and also our half-yearly results, which were also published. And I would just like to highlight that we've had a record Q2 and a record half year. And of course, one is because of the buoyancy in the market. People are traveling again. We're seeing there's a slide which Kallol would share on foreign travel that's still not at pre-pandemic levels, but we hope it'll get better. So there's significant upside with foreign travel, but our business continues to be strong. And I would just like to thank our guests who are loyal to our hotels. Kallol will present some STR data which shows that, and also our colleagues who work so hard to make our guests' experiences special. So with that, I'll just pass over to Kallol to go through the presentation, and then we'll be more than happy to answer your questions. Thank you very much.
Thank you, Vikram. Good afternoon, ladies and gentlemen. It's a pleasure to be back again. So the quarter and the half year has certainly been very good. We will begin with a brief highlight of the global economy. So obviously we are going through a very complex set of environment and set of factors with rising interest rates, with monetary policy tightening, financial sector turmoil, supply chain disruptions, elevated inflation, and so on and so forth. And amidst all this, it seems like as pointed out by Hotelivate in one of the recent reports, that the Indian economy seems to be in a Goldilocks zone, where we are looking at quite a few factors which appear to be buoyant, including the GDP growth, the private and public investments, our streamlined tax systems, bolstered digital infrastructure, and so on and so forth. India obviously also has a lot of demographic advantages, which really augurs well for the Indian economy. And certainly it appears that the Indian economy is in good shape right now. Within the Indian economy, the Indian tourism and hospitality industry is poised very well. And throughout my presentation, there would be cues where one could see or one could pick up where it's easily visible that there are certain opportunities which are yet to play out and those are probably opportunities that one could capitalize. So to begin with, let's say when talking from an industry point of view, where the contribution to GDP was 7% in 2019, it's still a shade below 6%. Employment is still lower than what it was pre-pandemic. And obviously, these are all opportunities for the industry as a whole. As per the WTTC, the industry is expected to grow at 8.4% and generate about 19 million jobs. Of course, the airport connectivity and infrastructure in general is really going through a boom phase in India. And of course, there's a lot of impetus on several objectives that the tourism policy has really taken forward. But to speak on more specific terms, if one were to look at the operational trends in FY30, one would see that in the hotel industry, on an overall basis, room revenues have, or for instance, the ARR has increased by about 13%. Likewise, RevPAR has also increased by about 13%. But when one were to look at the 5-star deluxe category, which is the luxury category, there one finds the RevPAR has increased by 23%. And this is the same trend that we notice in our business, because as an organization, as a company, we primarily play in the two uppermost segments, which is luxury and upper upscale. And it seems from the trends that these are the sectors where, or these are the categories where the growth is really buoyant. In terms of future supply also, again, as per Hotel EIH report of 2023, about 55,000 new room nights are to be added in the next 5 years, which will take the supply to 220,000. But within that also, again, the majority of the supply, 2/3 of the supply, looks like will be below the upscale categories, which means that the supply is in the luxury and the upper upscale categories will be slightly lower, which in fact, from a demand supply scenario, augurs well for an organization like us. On an overall basis, EIH has consistently shown or demonstrated RevPAR, which is growing faster than the industry. It's evident in the chart, in the line chart, where the top 3 lines are EIH, and they seem to show an upward trend. The numbers from HVS Anurag report of October shows that in September, where the RevPAR of generally of the industry rose between 19 to 21%, the RevPAR of EIH Limited, taking all domestic hotels, rose by 48%. So this again is a reiteration of the point that we saw a slide before. In so far as operations are concerned, again, this is an ongoing chart which is there in every analyst or earnings call presentation, and it keeps getting added. And so far there has been not a single period barring that 1 month in 2020 when the RevPAR index was not above 100, which means that the competition set that EIH plays with has consistently enabled EIH to maintain a RevPAR leadership. This is a new dimension that we thought we'll present to all our investors and analysts, where each of our categories, the different brands, the 2 brands that we have, and the different categories where we are positioned, how they have moved between last year and this year insofar as Q2 is concerned. So what you would notice from this chart is the green colors are the ones which represent the current year. In the various categories, it starts with the Oberoi Leisure, International, Oberoi Metro, Trident Metro, Trident Leisure, and the 2 other hotels which are not part of Oberoi and Trident. In all these cases, there is a RevPAR growth effectively either through increase in occupancy or through increase in ARR. And we can see how the positioning is in each of these categories. By far, going by industry standards, this definitely is one of the best. On RevPAR in general, again, when we consider owned and all domestic hotels, the blue line represents the owned hotels, and the golden line represents all domestic hotels, including managed hotels. The RevPAR has grown by 23% and 19% respectively. And of course, throughout the various second quarters for the last 4 years, the trend is visible on the slide. Within the quarter of quarter two,
Kalol, if you could just on the previous slide, just highlight Simla because.
Yeah, thank you, Vikram. Yeah, that's true. So one of the factors which we have mentioned here is, although the RevPAR is 9,543 in case of all hotels taken together, what must be noted is that this includes Shimla hotels, which were severely impacted by negative environment conditions. So if that was this kind of force majeure situations weren't there, then the RevPAR for the golden line too would be much higher. Thank you, Vikram, for pointing that out.
And really, Q2 was terribly impacted for Simla. We saw really demand fall off a cliff as far as our Simla hotels were concerned, and I think that applied to us and applied to other hotels in Simla.
Yeah, that's right. Now, for June, July, August, different months, again, the trend is upwards. The same reason which we just mentioned. The drop in occupancy is, and maybe slightly muted ARR, is also because of the Simla hotels. Having said that, generally the average room rates have grown from 11,177 to 13,736, which is a very positive trend. And mind you, in quarter two of last year, really speaking, business had already started picking up. So the comparison here is very pertinent. When we look at city by city, again, the various increase, the growth in RevPAR in the various locations or geographies within India are as shown here. Shimla, of course, is, at the cost of repetition, is the only one apart from a small degrowth in Cochin, which has seen a degrowth in RevPAR. Strong tailwinds continue across all the segments. In fact, what is heartening to note is also corporate is pretty stable. Direct continues to be very robust, and there is an upward trend in MICE as well. Foreign room nights, as Vikram was earlier mentioning, as a percentage of total room nights, while this has picked up over last year, same quarter, this is still to cross pre-pandemic levels. So in case of Trident, it is still at 32% as compared to 45% insofar as Q2 is concerned. Oberoi is at 40% compared to 53%, and on an overall basis, it's 35% compared to 47%. When viewed in terms of absolute foreign room nights also, it is the same picture here, where it's really evident that, and on the left-hand side, the axis shows the absolute total number of room nights for Trident hotels and Oberoi hotels in India. So as we can see, the recovery levels are still to happen completely. And as I mentioned a while back, that these are certainly opportunities for the company to generate even better business in the third and the fourth quarters respectively. Oberoi Flight Services and Airport Lounge, there is a strong comeback. And as is evident in the last 5 years, this is the highest revenue, and amongst the highest revenue, of course, in many years, with a very, very robust margin. This is industry-leading margin at 37%, and the business is looking really good. On the financials, it's our strongest quarter ever. Quarter two with a revenue of 490 crores, EBITDA of 148 crores, and PAT of 85 crores. On a consolidated basis also, it is the strongest performance. And of course, here you can see 6 years, because prior to that, quarterly consolidation, as you would know, was not in place. But in this quarter, in case of consolidated accounts also, it's 552 crores of revenue with 165 crores of EBITDA and 94 crores of PAT. This has really enabled and strengthened our funds position both on a standalone and consolidated basis. And we are today net cash positive at 227 crores on a standalone basis and 509 crores insofar as consolidated accounts are concerned. The marginal drop that you can see from the previous quarter to this quarter is on account of an investment from one of our international companies in terms of an equity infusion. So that's one of the primary reasons for this decrease. And the other reason is, of course, the payment that has been made for our Mashobra case. Performance highlights, really strong quarter. Revenue up by 33%, EBITDA up by 66% with almost a 6 percentage point margin expansion, and profit after tax up by 213%. Quarter-on-quarter position is provided here. Sorry. Quarter-on-quarter position is provided here. On a consolidated basis also, revenues increased by 32.5%, EBITDA by 64%, with a 5.7 percentage point margin expansion, and profit increased by 256%. This is again a quarter-on-quarter sort of performance. The premium positioning continues to be reflected in awards and accolades, of course, from Travel and Leisure, Telegraph Travel Awards, and the Robb Report. But also a pleasantly surprising addition to the list is the CII DX Awards for our Center of Excellence. The business footprint is for those who would like to have a snapshot of our structure. Thank you so much.
Thank you, Kallol. That was quite comprehensive as usual. Friends, we now open the floor for the Q&A session. Anyone with questions, please raise your hand and we'll take it up. We'll just wait for a couple of minutes while questions are being lined up. And friends, request you to please come on the Q&A with your hands raised rather than putting it on the Q&A. Okay, the first question is from Vikas Ahuja. Vikas, please go ahead.
Hi. Thank you for the opportunity. Am I audible?
Yes, Vikas, please go ahead.
Yes. So hi, this is Vikas from Antique Securities. My first question is, and before that, congratulations on such a strong quarter. My first question is, how should we, look at, especially, this year we have been reporting very strong numbers, and it's given, Q3, Q4 is also going to be pretty strong. But how should we look at next year with, election coming in Q1? Mostly we normally see a decline in ADRs during that time. So, from Q1 onwards, how should we look at the quarter? I mean, should we see this, strength we have been seeing to continue, barring that quarter? That's my question number one.
Good afternoon, Vikas. Thank you for your question. It's I can't recall at the previous election what impact it had on individual hotel performance. And I really, unless we refer to data, I'm reluctant to provide any insight. But could I request you, Vikas, we'll look at that, and we're happy to discuss it offline. I don't want to just hazard a guess unless Kallol has specific data. But I think we really need to look at previous elections. Typically, lead time, pace of reservations this far out wouldn't be an indication. So I hope that's all right. Kallol, do you have anything further to add?
Yeah, no, I think the elections are still some time away, and with the dates, etc., still to be concretized. It's, I think, a major event. So obviously, we'll closer to the date, we'll know better.
Sure. That's fine. Secondly, any early indication on, how rates have moved during the current World Cup? Because there have been so much of hype, especially coming from the media. Did we actually see any material improvement in the business because of the World Cup, or it was, few, hotels here and there, or that, if you can maybe answer this.
Yeah. I think wherever matches have taken, we're not in all locations where cricket matches have been held and will be held. But in certainly our understanding, not only for us, but for others as well, is there has been a strong increase in rates. And we also experienced that in during G20 in Delhi in particular. Kallol, is it okay to disclose the average room rate we achieved for the Oberoi New Delhi during that period?
We don't get into hotel by hotel, Vikram, but I think, yeah.
But we saw very, very strong rates. So I think anytime, not getting into specifics, but anytime there is strong pressure on demand or strong demand versus supply, you will see that reflected in room rates.
Sure. So what I could make out is we should see some improvement because of the World Cup. Okay. And my final question is, in one of the slides you have talked about that there is a 10 percentage points better RevPAR for RevPAR growth for 5-star deluxe versus the others. Demand supply, I could make out. Any other particular things which led to such a strong growth in that particular segment?
Kallol, I'm not sure which slide this refers to. Do you want to take that question?
Yeah, I think, are you talking about the scatter chart where in various categories we've shown, Vikas?
No, so there was slide number 4. On that, there was a 5-star deluxe where the RevPAR improved by 23%.
Yeah,
versus overall.
Yeah, that's the reported numbers for the industry as a whole. That's not for EIH. That's for EIH. That's for the industry as a whole, as was reported by.
Yes. Sorry if I said EIH. I'm just trying to understand, is that trend you are seeing in EIH also, and any particular reason why the 5-star deluxe is doing particularly well compared to the overall the others?
Kallol, it may be worth drawing Vikas's attention to slide number 5, which shows our RevPAR, EIH domestic hotels RevPAR, which
I was about to say that actually the whole theme of the presentation you would see, and at least the way you look at data, is the fact that the more luxury and the upper upscale segments are the ones which are performing better, both across the country. I mean, that's a trend which is seen across the country as well as in our case. And one of the reasons why we have a very strong margin growth is also because of the higher rates that we are able to command, and we operate in these two segments primarily. So like Vikram said, slide number 5 is one indication. Another one would be slide number 8, where you would see category by category what is the RevPAR growth that has happened. So obviously what is evident is that the spending power of our guests have increased a lot. And in accordance with, and one other point that I mentioned already was that the supply generally is stronger in the lower categories than on the upper categories. So therefore, there's a demand pull on that as well. So this looks to be a more fundamental aspect that hotels that operate in the higher categories are able to enjoy better growth in RevPAR. Vikram, you may want to add something to that.
No, I don't have anything further to add to that, Kallol.
Just one final.
Vikas, I'll have to interrupt you because there are a lot of other participants with questions. Thanks a lot.
Thanks a lot, and have good luck for the next quarter.
Thanks so much, Vikas. Thank you very much.
Friends, request you to limit yourself to one question initially, and we'll come back if time permits, because Mr. Oberoi is pre-committed to another engagement and we need to wind up with a time on. The next question is from Amit Agarwal. Amit, please go ahead.
Good afternoon, everyone.
Hello, Amit. How are you?
Good, thank you. My question is regarding Marrakesh and Shimla. So because both had natural disaster, how are they doing in this particular current quarter, both the properties? Marrakesh and Shimla both.
I beg your Marrakesh and Simla. So I'll pick Simla first. We've seen a recovery in Simla after the floods, and Cecil's occupancy has gone up. The other thing with Cecil is, and I know I'm not supposed to talk specifically about hotels, but we get a large part of business from overseas. This is UK travelers coming to Simla because of the historic nature of Simla. And so that's really helped with Cecil's occupancy. That demand has been strong. Wildflower Hall has also started to recover, but the extent of recovery isn't as strong as the Cecil, largely because Wildflower Hall doesn't get the same level of international travel, more specifically UK travel. Marrakesh, there was the earthquake. Before I answer the question on that, we were very fortunate that the hotel, our staff were well. There was no injuries to our guests, no injuries to our staff, and their families also were unaffected. The earthquake had the largest destruction up in the mountain regions, and we're some distance from that. Business is returning to normal, but we did see strong cancellations. And I think Morocco is also impacted by the crisis we're seeing in the Middle East. So we are seeing some cancellations. I hope there's considerable pressure for a ceasefire. And although the Americans are still holding ground with Israel, I hope we'll see a ceasefire, and that will help the loss of life, of course, innocent life, and also I'm sure will impact our hotel in Morocco, in Marrakesh.
My question is more regarding the infrastructure going to these hotels, including Chandigarh. Has this been damaged, or there's no change now?
Absolutely no damage in any of these locations.
The same with Chandigarh?
Same with Chandigarh.
How is the traffic compared to YOY in this particular quarter right now?
Chandigarh, fortunately, is doing well. It wasn't impacted by the floods in Himachal.
Okay. And my second question is regarding catering flights. How much is congratulations for touching 100 crore for the quarter? And how much is this business coming from domestic sector, and how much is from international sector?
It'll be largely from international, but Kallol, do you have the numbers?
Yeah, I think we don't get into so much of detail, Amit. It's not a separate segment for us. But majority of the airlines is international. Of course, in the domestic part, I can generally tell you that Calcutta has done very well. Of course, we have a lounge which in Bombay does very well, and both Bombay and Delhi are reasonably good. But in general, it's more international flights for us.
Okay. And my last question is regarding any updates on upcoming projects?
Actually, I just wanted to, I think I saw a question from Sanjay as well. So I'll take that question now. Sanjay's comment was on the strategy for 2030. And what I'd like to mention is we have a vision, EIH vision for 2030, which is at a very minimum 50 more hotels with about 4,500 additional keys. And we are focused on achieving that. You'll see some hotels, there'll be some hotels that you'll see in our annual report. More recently, there was, we announced a Trident Hotel in Tirupati, which is done with Mumtaz Hotels, and with EIH associated a hotel in Vizag. But as and when we announce projects, we will, as per stock exchange guidelines, inform the stock exchange. But we have a number of hotels that are coming to fruition, and we'll be able to make announcements, I hope, on an ongoing basis.
You said 15 or 50?
50.
50 in next 7 years.
That's correct.
And how many will be managed, and how many will be owned?
It'll be a combination of owned and managed.
Any percentage?
Kallol, should we give the percentages?
So, Amit, as Mr. Vikram Oberoi mentioned that, we'll be adhering to the LODR guidelines. We are very careful about the new disclosure norms, etc. So as and when it comes, we'll give. For the two projects that has already been announced, these are owned by our subsidiary companies, meaning one is being owned by a subsidiary company, Mumtaz, and one by our associate company, EIH Associated Hotels, and both will be managed by EIH Limited. And of course, being a subsidiary and associate, EIH will also get a share of the profits. So really speaking, there are complications around the structures, which are positive to our business. And therefore, we would want to make the announcements as and when we follow the guidelines of LODR.
Which is the other hotel besides
Amit,
last. That's it.
No, please. You'll have to join the queue. Let's be fair to the other participants.
Okay, thank you.
Thanks, Amit. Thank you.
The next question is from Bharat Singh. Bharat bhai, please go ahead.
Audible?
Yes, Bharat bhai, please go ahead.
So congratulations, Vikram and Kallol, on good set of number.
Thank you.
So Vikram, just take forward from, previous participant, and so from say short-term perspective and medium-term perspective, if I look at without going in any hotel, just we look at past trend of our H1, H2. So H1 is used to be around 40% of the top line and 60% is H2. Whereas bottom line is the other way, 25-75. So do we expect that also to continue that same trend in this year also? Without going, because this is before election, so we don't know about election.
Yeah, Bharat, I'm sorry, I didn't understand your question. Kallol, did you understand Bharat's question?
I think what he's asking is, the seasonality of business. Basically, what earlier we used to see the revenues between H1 and H2 used to be 40-60, according to Mr. Bharat Sheth. And the profitability was lower in H1 and higher in H2. Is the same trend going to continue? That was your question, right?
Sorry. So profit, bottom line used to be 25 in H1 and 75% in H2.
Right. Okay. Now I've understood the question. So I think our winter, we do fairly accurate forecasts of business. And our winter touchwood is looking strong. I would say that we will be very close to previous. Again, I don't know if I should give forward-looking statements like that or not.
Directionally, if you can.
But I would say business is looking good. Let me just answer it that way.
I think already, to add to what Vikram is saying, already if you look at H1, it's very different from the H1s of the past. So the EBITDA of H1 on a standalone basis is already 300 crores. So therefore, really difficult to say that the ratio will be maintained or not. But there's really speaking, when you compare H1 of FY24 with any other year, it's very, very different.
Kallol, may I also say one other thing, which is, and I touched upon this last time we were on a call, and I had highlighted that there is considerable upside on average room rate. And we're already seeing that. So we're seeing strong increases in average room rate in hotels, EIH, where demand, in fact, across all our hotels where demand is strong. That is being then reflected by sharp increases in the average room rate. And I just wanted to add that as well.
Yeah.
So as a, veteran hotelier, how do we see this ARR trend, which is say after 10 years of, say from 2008 onward it was also, do we see maybe growth rate on ARR, maybe softer, but do we expect that it should continue in coming year?
Yeah. So Bharat, my perspective on this is that we have in India, exceptional hotels in the 5-star deluxe segment. And these hotels are relative to global prices, particularly in city locations, maybe to a lesser extent in leisure locations. But in city locations to a large degree, and in leisure locations, still underpriced, but to a smaller degree, well below what you would pay for, guests would pay in other locations across the world. And therefore, demand being strong, we should see substantial upside in average room rates.
Okay. And last question on this expansion, you said that by 2030 we plan to add 50 hotels. Great.
50 new hotels.
15. 50.
Yes.
So is it possible to get some kind of, how much would be in, say, next 3 years, and then balance how much will be there? If you because you must be working very closely on the plan, and maybe some may be under a pipeline for announcement. So if you can give some broader, breakup or.
So I think two things. First of all, we are confident of achieving that. And secondly, as and when we finalize hotels like we did with the Tirupati and Vizag hotels, we will make announcements. And you can also, if you refer to our annual reports, there are some projects already underway. So Rajgarh, for example, is one. So that's covered in our annual report. But we've taken a decision as and when hotels get finalized, we will make those announcements by informing the stock exchange.
Apart from that, there is one more hotel we have mentioned in our annual report is on Andhra Pradesh. So, which is, I'd say, for tourism. So,
I don't know which is the location mentioned. We are actively pursuing other opportunities in Andhra Pradesh, and we will make those announcements in due course.
I think Bharat may be referring to some newspaper reports that came out. So please wait for that announcement, because there are 2 hotels which just got concluded, and where we've intimated those to the stock exchanges. As and when it happens, we'll certainly intimate to the stock exchange, and you'll get to know.
Great, and thank you, Vikram and Kalol, and all the best.
Thank you, sir. Thank you so much. Really appreciate your good wishes and your support. Thank you.
Thank you, Bharat. Next question is from Hari S. Hari, please go ahead. Hari, please go ahead. Okay, some connectivity issues. We'll go on to the next. Jaivi Shekhawat.
Am I audible?
One second. Yeah, Hari, please go ahead.
Yeah, only one question, sir, regarding this occupancy levels, like pre-COVID and like even compared to the previous year, the growth rate is very low. Everything else is good. Like any reason for that, sir?
I think, Hari, one reason Kalol mentioned is Simla. Simla did very, very, very low occupancies for the entire quarter. Kalol, is there anything further you would like to add to that?
No, not really. I think pre-COVID wise, it's fine. I think what we are generally seeing, if you compare with last year, it's the Simla hotels which is really.
Okay, that's all, sir. Thank you very much.
Thank you, sir.
Thank you, Hari. Let's take a question from Jaivi Shekhawat. Jaivi, please go ahead.
Sure, thanks for taking my question. Good evening, gentlemen. Firstly, in terms of the rates, what I hear from you, Mr. Oberoi, is that we understand that the global prices and where prices are in India, I think there is a good disparity there. But given that majority of your demand continues to be still driven by domestic guests, how much further room do you think there might be there to the ADRs before it starts impacting demand due to unaffordability?
So, Jaivi, may I answer your question a different way, just to illustrate the point I mean on supply and demand? And I'm going to give you a very specific hotel to answer that question. I don't know if I'm sure you're familiar with Gurgaon, but when the Trident Gurgaon, which is a managed hotel, opened, there used to be one hotel in Gurgaon, which was the Bristol, and that hotel was doing just under a 20,000 rupee average room rate. The hotel is now doing a lower average room rate than it was doing then. So to me, and there's there's greater buoyancy in the market today than there was then. So I think the key drivers are really supply and demand. And of course, provided the hotels are quality hotels. So I believe, I will stick to what I'm saying, that I believe there is, whether it's domestic or international, I believe there's considerable upside. And we see the Indian guests having a high propensity to pay as well. So we're already seeing that today.
And so lastly, on your vision as well, Vision 2030, I heard that there has been significant upgrade because as per, say, the 4Q presentation, the plan was to open about 9 hotels. But given that majority of your hotels might come in, let's say, 4 to 5 years out, I mean, don't you fear that the capital cycle, the traditional capital cycle, might be up for the worse by the time your hotels come up? What will be your reaction to that?
So I think there are a number of hotels that we'll be able to, it won't just be that hotels will come right at the end. So again, I'd say the proof of the pudding is in the eating, and we would like to take a more conservative approach in making announcements. But we remain confident, we remain driven, we remain focused on driving the right kind of growth. And I remain confident that we will achieve our vision.
Sure. Thanks a lot and wish you the best.
Thank you so much. Really appreciate it. Thank you.
Thank you, Jaiveer. The next question is from Tarang Agrawal. Tarang, please go ahead.
Hi, good afternoon, and congratulations for an extremely strong set of results. Sir, you spoke about higher propensity for an Indian consumer to spend. I was just curious to know, over the last maybe 3 years, 4 years, or 5 years, are you witnessing any change in the demographics of, patrons visiting your properties? Any tangible, I mean, are they getting younger? Or I'm just curious what drove you to, make that comment?
First of all, the age at Trident Hotels is younger than Oberoi. And that was in the past, and that continues to be the case today. We are seeing more women travelers. So if we go back historically, we'll see more ladies traveling, particularly business. We're seeing family demand, Indian family demand traveling in small groups at our domestic hotels. I'm just trying to think if I've missed anything out. And then maybe I haven't, I don't want to certainly give you the wrong answer, but if my memory serves me correctly, the Oberoi guest and the Trident guest have both become marginally younger.
Oh, okay. That's helpful. The second question was, if you could give us a consolidated occupancy and ARR for the hotel business. I mean, including managed, domestic, international.
Yeah, sure. Kallol, do you have that?
That's already there in the presentation. So,
and Kallol, have we given EIH EIH owned and managed hotels separately? Have we provided that as well?
Yeah, we've given it for all domestic hotels taken together.
But I think I think because EIH is impacted most significantly by the hotels we not only manage, of course we manage them, but we also own them. Would that be? I don't know if we have.
It's that. Okay. I can, if you want only EIH numbers, I can share those numbers. So EIH owned hotels, the occupancy was 77.5% against 76.5% in the same quarter last year, and an average room rate of 14,535 as compared to 12,018 of the same quarter last year. That is EIH owned hotels.
Yeah, last and if I might have missed it, but if you could just give me the F&B revenue for this quarter.
Sorry, F&B revenue of first quarter.
Q2.
Q2.
And the same quarter in the base year.
Okay, so.
And while you're looking at that, Kalola, I just wanted to mention that a large contributor to banquet revenue comes from the Trident Nariman Point. We have a ballroom which is under renovation and rooms next to it as well. So and therefore, the ballroom has a significant contribution to revenue. So when Kalola gives you that number, please keep that in mind.
Yeah, it's about 40%.
40% for this year, is it? This quarter of 531 crores.
Yeah.
And for the base quarter?
It includes the OFS revenues as well. Flight services revenue as well.
And for the base quarter?
Sorry, which quarter? Can we just take it offline because these are reported numbers, and
sure.
We can help you definitely offline with the numbers.
Okay.
Thanks, Tarang.
Thank you.
Thanks, Tarang. Thanks so much.
The next question is from Anuj Upadhyay. Anuj, please go ahead. Anuj, please go ahead. Seems to be having some problem with his audio. Let's take a question from Udit Sehgal. Udit, please go ahead. Udit? Hello, can you hear me?
We can hear you. Yeah, we can hear you.
Surprising, all participants can't hear them. Udit, can you go ahead with your question, please? Okay, I guess they're having some issue. Let's take the question from Saurabh Patwa. Saurabh, please go ahead. Saurabh, your voice is breaking.
Hello.
Yes, Saurabh.
Yeah. So thanks a lot for highlighting your expansion, the big picture of your expansion. I just wanted your thoughts on two things. One is our strategic partnership with Mandarin, which in the past you have highlighted, and also Reliance Industries announced 3 hotels in partnership with EIH. What would your thoughts and what's EIH contribution to that partnership?
So would you like me to answer for both? Okay. Yes, that's correct. There was 3 hotels. Reliance had made a press release, and those details are in that. And we look forward to developing those hotels and also other hotels with Reliance, I hope, in the future. As of now, it's only those 3 hotels that Reliance had announced. As far as Mandarin goes, really the objective was to bring benefit to our guests and Mandarin guests, to bring benefits to our colleagues. So there would be learning opportunities from each other. And those were really the 2 objectives, and we continue to work on those fronts so that we can offer greater value, greater experience to Mandarin guests and vice versa, and also enrich the experience of our colleagues, both for Oberoi and for the Oberoi Group and for Mandarin.
Okay. Yeah. Thanks a lot for all of this.
Thank you very much.
Thanks, Saurabh. Take the next question from Sanjay Kohli. Sanjay, please go ahead.
Good afternoon. Thank you for the opportunity. Very nice, decent set of numbers. I think my main question has been answered, sir, about the strategic plan. If you can elaborate on when you say the right kind of growth, if you can throw some light on this.
Sure, happy to, Sanjay. Sanjay, for us, we really our vision, or our founder's vision, and our chairman emeritus vision for the company has always been to be the best, and therefore we want to be RevPAR 1 against our competitive set, and we look at that very closely. Whether we are not, we work hard towards being RevPAR 1. But I'm happy to say that in most locations, our hotels are RevPAR 1, and in some cases RevPAR 2 in their competitive landscape. That's the vast majority of our hotels. So as we look to the future, we would like to continue that. That's a very important objective of ours, because higher RevPAR or higher revenue leads to a more profitable hotel with better margins. The hotel business is a large part of the business is their fixed costs. So once you cover those costs, your margins have the potential to increase substantially.
Thank you. Just quick follow-up. In when we are looking at the next 6 years till 2030 and the expansion put into place, is there going to be a change in the philosophy on how you will manage the capital structure, and can we expect greater leverage and a certain amount of perhaps a little less conservative on the financial management, the way you manage your assets? Is that to be expected in perhaps an environment where the cost of capital is now sort of uncertain and has spiked up in the last 24 months, for instance?
Yeah.
And may continue.
Yeah. No, Sanjay, very, very, very good and a very relevant question. So thank you for that. We today, and you'll see in Kallol's presentation, our cash position, both on for EIH standalone and for the consolidated. But we will be taking on, in order to drive growth, we will be taking on debt. And the management's internal benchmark for this has been 25%. So we would like to remain within that. Kallol, is there anything you'd like to add to that?
Yeah, I think firstly, it's again, I would echo what you said. I think, Sanjay, it's a very good question and very pertinent question. What is important is that, the hotel sector, especially luxury hotel sector, will always be, seen as a cyclical sector. So we must be cautious. And one of the hallmarks of our organization has been that we've managed our cash and debt and balance sheet pretty well, and therefore we've been able to weather the storms. So what is important is, as we drive growth, obviously there'll be in these years in which there is a high EBITDA accrual, obviously cash generation is high, and therefore our ability to take debt is also there. What we very closely look at is several parameters. When we embark on projects, we have our hurdle internal rate of returns, and those should necessarily exceed the cost of capital at any point of time. And therefore, to your question on the increasing interest rates and therefore increasing cost of capital, obviously we will go into projects that make sense for us financially. That's the first point. The second point is, over a 5 to 7 year period, we look at return on capital employed for each specific asset. And towards that, we make sure we see what kind of balance between the capital structure enables us to generate those kind of returns on capital employed or return on capital invested capital. And thirdly, and most importantly, I think while we embark on this path of growth and maintain our profitability, what we also always keep in mind is what is our debt service coverage ratio and what is our interest coverage ratio. And we have our own hurdle rates for those as well. we will not go beyond a situation which makes us uncomfortable. If this somehow gives you some insight on how we operate.
Thank you. On behalf of Goldstone Capital, thank you very much.
Thanks so much, Sanjay.
Thank you, Sanjay. Okay, we have just about time for the last two questions. Let's take this one from Nilesh Saha. Nilesh, please go ahead.
Yes. Hi. Thanks a lot. Right. Are you able to hear me?
Yes, Nilesh. How are you?
Okay. Good. I think, thanks for doing this on Zoom. It is, nice to put a face on the voice. I joined a bit late, so I perhaps missed a bit of your comments around expansion, right? But I just, we really appreciate your conservatism and your, philosophy towards maintaining your brand and RevPAR 1. I just wanted to understand, as you look to expand now, right? When you enter, as you expand, right? Whether you are entering a new market or an existing market, how do you manage, your occupancies, given that it seems that you want to really maintain your pricing, right? How do you sort of balance that dynamic, right? You can comment on that. And the second question that I would have is that do you find other mechanisms, such as, managed hotel and stuff like that can help you, grow faster without necessarily taking on debt? So those are two broad questions. Feel free to answer to the extent you can, and I look forward to meeting you guys at some point and having a more detailed discussion. Thank you.
Thank you, Nilesh. When we look at locations where we can potentially open hotels, we do the best we can to analyze what the market will be, and our objective is to go into markets that have good occupancies and good average room rates. So that has worked for us in the past, and I hope that works for us into the future. So I think selection is very important. Where we're going to build the hotels, number of keys that we will build, and our focus is certainly also to increase the number of hotels we manage. But whether we manage them or own them, our objective is to be RevPAR 1 and to drive strong numbers for our owners or for EIH.
Right.
So that doesn't
right.
That doesn't change. So I don't, Nilesh, have I answered your question?
Yeah, just I think given that you are entering into an expansion mode after some time, and the fact that the industry is also picking up. So in your estimate now, that if you were to, I'm just trying to imagine, right? When you open a hotel and you are RevPAR 1 on day one in that market, right? What is the path for that property to reach your company level occupancy? How long would that take I'm just at a ballpark. That's what I'm asking, Vasil.
No, sure, Nilesh. Good question. So it takes typically 2, possibly 3 years for a hotel to stabilize. Again,
it
could vary, and it could vary based on a particular destination. So if there's greater competition in that location, it'll take longer. If you're more dependent on corporate business, it could take longer because you have the RFP process for rates. Corporate rates, which are a large part of your demand in city locations. I just wanted to add, in our vision, we, as far as Oberoi is concerned, our focus will be leisure and to a large extent, so Trident. With leisure hotels, the cycles are relatively shorter, and I hope there will continue to be strong demand from the domestic market where we have a loyal guest base. So I hope the ramp up will be, above what it normally takes.
Right. The second thing what I asked, sorry, yes.
Nilesh,
I'll go back in the queue.
Thank you.
Yeah.
Sorry, Nilesh. Sorry. I actually have to head off for another appointment, so I really apologize. And perhaps that's why Naveen is limiting the number of questions. So,
friends, I've already shared the investor presentation, and I've shared my coordinates. We have just about time for 2 final questions. Vikram, is that fine?
Yeah. No, please go ahead.
Okay. So we have the next question from Rajiv Bharti. Rajiv, please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So you have given the timelines of the 2 projects, Tirupati and Vizag. It seems to be 4 years, slightly aggressive from the history what we have in terms of meeting that. So are we building some conservatives in that thing also, or is it aggressive, and is it going to be a thumb rule incrementally as well? Whenever you assign and take up a greenfield project, this will be the kind of timelines you will have.
Well, I'm hoping actually the timelines will be shorter than that. That's the outer limit. But I hope we can finish the hotel sooner than that in both locations.
And the land at Tirupati, is it leased or this is owned by us?
It's leased from the government, from the state government.
And lastly, in terms of the, let's say, per key cost, which is 1.3, 1.4 crores for these 2 projects, this is again can be used as a thumb rule incrementally. Plus, let's say when you build a Oberoi, what is the let's say incremental premium per key cost?
Right. So you're right on Trident and Tirupati. Tirupati and Vizag, and the lease terms are very favorable, but hotel development costs will be roughly that. And like I said, when we make announcements on Oberoi, we will share those as well with you at that time.
Just if I can squeeze one, are you looking to participate in the Noida business for your OAS business as well? Flight catering business for the Noida airport. You're one of your competitors has announced an arrangement there.
Yeah.
May I answer that?
Sure, please.
So, Rajiv, we are in all the locations where we are present, we definitely evaluate. But one must also look at what is the composition of the domestic business, what is the lead time, and all of that. So, at the appropriate time, and given if we see that business as close to our business model, then and it works in terms of cost, we would definitely look at any opportunity, including Noida and Navi Mumbai.
Thanks a lot and all the best.
Thanks, Rajiv.
Thank you.
Friends, we've run out of time completely, so I'll take the last question from Hinal Chaudhary before I let Vikram go. Hinal, please go ahead.
Yeah, are we audible?
Yes, you are.
Yes.
Okay, hi. So this is Anuj Upadhyay. Sorry for my earlier sense. My voice was not audible that time. So quickly, 2 questions. One is on the Shimla per se. So how exactly the situations are there now? And when can we expect the normalcy of the tourism to be, back to the pre-issue, which we have seen earlier?
Great. Good afternoon, Hinal. It's Anuj, right? You said
we both are there, sir. It's fine.
Okay, you're both there. Okay, all right. Well, we can hear you loud and clear, Anuj, now. So the Simla hotels are already coming back. Like I said, Wildflower Hall is taking slightly longer because of us going into winter and us having various series blocked at Cecil. We've seen a very quick recovery at Cecil, or a quicker recovery at Cecil. But I'm sure both the hotels will recover in due course, and I think that'll be sooner rather than later, I hope.
Okay, fine, sir. And on the expansion per se, you mentioned that by 2030 we expect to add incremental 50 hotels. That, if I'm not wrong, would translate somewhere close to 4,500 keys. Can you just bifurcate or provide any kind of guidelines among the proportion between the owned and the managed hotel for the same? And also, sir, as these hotels will come up, say after 5 to 6 years kind of a timeline, which probably we may see some kind of a moderation happening. So just to, understand your view on the longevity of this cycle, or would there be any cyclicality being persistent in this sector at all going ahead, considering, the way our economy is going?
I'm just trying to, sorry, your first question was on owned versus managed.
For the incremental capacity, sir.
For the incremental capacity. And please, my request is, please be patient. As and when we're in a position to announce, we absolutely will. We would like to grow through both managed and owned hotels, or hotels where we have significant investment. So that's on the first part. On the second part, on cyclicality, it's your guess is as good as mine on what's going to happen in future. And if demand continues to be strong, I hope we'll be able to do even better. If there is some events that cause us to relook, of course we will do that.
Fair enough, sir. Thanks.
Thank you, Anuj.
Thanks, Anuj.
Friends, we run out of time and we've overshot the time that Vikram had given us. Request you to forward your questions unanswered and follow up to me. I've shared my email ID. And now on behalf of all of us at SKP Securities, thanks a lot, Vikram and Kallol. Vikram, Kallol, any closing remarks, please?
No, I just wanted to say thank you, Naveen, and also to Naresh. So thank you both so much, and thank you to all our colleagues who joined us for this call. Very much appreciated. I hope we can move the company from strength to strength going forward.
Thank you. Thank you, everybody.
Thanks a lot, Vikram and Kallol. Once again, thank you, friends, for joining us for this webinar. And we look forward to hosting you again on the next one. Thank you. Have a lovely week.
Thank you so much.
Wish everybody a very happy Diwali.
Oh yeah, very happy Diwali. Gosh, how did I forget that? I apologize. Very happy Diwali to you and of course to your family as well.
Thank you. Bye-bye and have a lovely evening. Bye-bye.
Thank you. Take care. Bye.